Good morning, everyone. Welcome to today's presentation. I'm excited to have you here. Today, we'll be exploring the Goods and Services Tax, or GST, from a polity perspective. In this session, we'll cover the fundamentals of GST, its implications on governance, and its role in shaping our economic and political landscape. So, let's get started and delve into this important topic together. Let's start by understanding what GST is. GST, or Goods and Services Tax, is a comprehensive indirect tax that applies to the manufacture, sale, and consumption of goods and services throughout India. It's designed to create a unified tax system across the country, making things simpler for businesses and consumers alike. Before GST, India had multiple indirect taxes like VAT, service tax, excise duty, and entry tax, which often made the tax structure complicated and cumbersome. The idea behind GST was to replace all these with a single, streamlined tax system. This change was a significant reform in India's tax landscape. GST was officially implemented on July 1, 2017, following the passage of the 101st Constitutional Amendment Act in 2016. This step aimed to boost economic growth by making tax compliance easier and reducing the cascading effect of taxes. Overall, GST is a major move towards a more efficient and integrated tax system, aligning with India's broader goals of economic development and ease of doing business. Let's take a look at the historical background of India's indirect tax system before GST was introduced. Prior to GST, India had a quite complex system with numerous taxes at both the central and state levels. On the central side, there were taxes like excise duty, service tax, and customs duty. At the state level, taxes included VAT, sales tax, octroi, entry tax, and purchase tax, among others. This patchwork of taxes often led to cascading effects, increased compliance burdens, and sometimes even tax evasion. The idea of implementing a Goods and Services Tax, or GST, was first proposed way back in 2000 by the Atal Bihari Vajpayee government. It was seen as a way to simplify the tax structure and create a unified market across India. Over the years, this idea gained momentum, but it required extensive consultation and planning. The final model of GST was only accepted after years of discussions between the center and the states. These talks were facilitated by the Empowered Committee of State Finance Ministers, which played a crucial role in shaping the final framework. So this slide highlights the complexity of the previous system and the long journey towards GST, which aimed to make our economy more integrated and efficient. Now, let's turn our attention to the constitutional provisions of GST. In 2016, the 101st Constitutional Amendment Act was enacted. This was a significant step because it inserted and amended various provisions in the Constitution of India to pave the way for GST implementation. Essentially, this amendment provided the legal foundation needed to introduce a unified indirect tax system across the country. Let's focus on the key articles that were introduced and amended through this act. These are the most critical provisions that define how GST fits within our constitutional framework. They establish the authority of both the central and state governments to levy and collect GST, ensuring a cooperative federal structure. Understanding these constitutional provisions is vital because they form the backbone of GST's legality and functioning. They clarify how the power is shared and how the tax system is structured, which is crucial for the seamless operation of GST nationwide. So, as we move forward, keep in mind that these amendments are what make GST not just a tax reform, but a constitutional change, ensuring its stability and uniformity across India. Now, let's take a look at Article 246A, which grants a special power to levy GST. Essentially, this article empowers both Parliament and state legislatures to make laws related to GST. It's a crucial aspect because it sets the framework for how GST is governed across different levels of government. However, there's an important distinction when it comes to interstate supply of goods and services. In such cases, only Parliament has the exclusive authority to make laws. This means that while states can legislate on GST within their own territories, the central government holds the sole power when it comes to transactions crossing state borders. This division of powers helps streamline the GST system, ensuring clarity and consistency across the country. It also emphasizes the cooperative nature of federal governance under GST, balancing the roles of both Parliament and state legislatures. Understanding this is key to appreciating how GST functions as a unified indirect tax system, while respecting the constitutional boundaries that define the powers of each level of government. Let's take a closer look at Article 269A, which deals with the levy and collection of GST, specifically for interstate trade. When goods or services are supplied across state borders, this is where IGST comes into play. IGST, or integrated GST, is a tax that the central government levies and collects. However, what's interesting is that the revenue from IGST isn't kept entirely by the center. Instead, it gets shared between the center and the states, based on laws enacted by Parliament. This setup ensures that both levels of government benefit fairly from cross-border transactions, supporting the overall goal of a unified and efficient GST system across India. So, in essence, IGST helps facilitate smooth interstate trade while maintaining a balanced distribution of tax revenues. Let's talk about Article 279A, which establishes the GST Council. This is a key feature because it creates a constitutional body responsible for making important recommendations. The Council's main role is to decide on various aspects of the GST system, such as setting tax rates and exemptions. They also determine threshold limits, which means they decide at what turnover-level businesses need to start paying GST. Additionally, the Council works on developing model GST laws to ensure consistency across states. Another critical function is resolving disputes that may arise between states or within the system itself. Overall, the GST Council acts as the guiding authority to keep the GST framework fair, efficient, and adaptable to changing needs. It ties everything together in our overall effort to create a unified tax structure across the country. Let's take a closer look at the composition of the GST Council. According to Article 279A, the Council is made up of several key members. The chairperson of the Council is the Union Finance Minister, who leads the discussions and decision-making process. Along with the chairperson, there are other important members. These include the Minister of State for Finance or Revenue of the Union, who assists in financial matters at the central level. In addition, the finance or taxation ministers from all the states are also part of the Council. Their inclusion ensures that state perspectives are represented, which is crucial for the smooth functioning of the GST system across the country. This structure highlights the collaborative approach of GST governance, bringing together both central and state governments. It's designed to facilitate consensus on important issues, ensuring that the GST system works effectively and fairly for everyone. Now let's take a closer look at the voting pattern. The center's vote weight is set at 1/3, which means their influence in decisions is comparatively smaller. In contrast, all the states combined hold a vote weight of 2/3, giving them a larger say in the decision-making process. This setup ensures that while the center has a significant role, the states collectively have more weight. It's important to notice that for any decision to pass, we need a 75% majority of the weighted votes. This high threshold emphasizes the need for broad consensus, especially considering the distribution of voting power. It's a way to balance influence between the center and the states, ensuring that major decisions are made with substantial agreement from both sides. So, in the context of the overall governance structure, this voting pattern aims to foster cooperation and consensus, preventing any one side from dominating important choices. Let's take a closer look at the structure of GST in India. As you can see, there are 4 main types of taxes here. First, we have CGST, or Central GST, which is levied by the central government. This applies when goods are manufactured within a single state. For example, If a factory in Maharashtra produces goods, CGST will be applicable. Next is SGST, or state GST, which is collected by the state government. This also applies within a state, such as when a restaurant in Tamil Nadu provides dining services. Then we have IGST, or integrated GST, which comes into play during interstate transactions. So, if goods are sold from Delhi to Uttar Pradesh, IGST is levied to cover that interstate supply. Finally, there's UTGST, or Union Territory GST, applicable within union territories like Delhi or Chandigarh. This applies when a sale occurs within these territories. Now, let's connect this to the overall GST model in India. India follows a dual GST system, meaning both the center and the states levy GST simultaneously. They share the same tax base, which helps streamline taxation across the country. This dual approach is a key feature of India's GST structure, ensuring that both levels of government can generate revenue while maintaining a unified tax system. Let's take a closer look at the GST rate structure, as outlined by the GST Council. GST is divided into different tax slabs, which helps categorize goods and services based on their essentiality and impact. Starting with the 0% slab, this includes essential items like milk, fruits, and vegetables, things we consider basic necessities. Next, we have the 5% slab, which covers common goods such as sugar and edible oils, everyday items that are widely used. Then there's the 12% slab, which applies to processed foods and computers, items that are slightly more processed or advanced in nature. Understanding this tiered structure is key because it ensures that essential items are taxed minimally, while more processed or luxury goods may attract higher rates. This structure also aligns with the overall goal of GST to balance revenue generation with affordability for consumers. By categorizing goods this way, the GST Council aims to make the tax system fair and transparent for everyone. Now, moving on to the next key point. As you can see, 18% of the GST rate applies to industrial goods and most services. This indicates that a significant portion of the economy, particularly manufacturing and service sectors, is taxed at this rate. It's designed to keep these essential goods and services more affordable and promote growth. Then we have 28%, which is applied to luxury and sin goods, such as cars, tobacco, and similar items. These are typically considered non-essential or indulgent products, and their higher rate reflects a form of sin or luxury tax. It's also important to note that these rates are not fixed forever. They are periodically revised by the GST Council based on economic conditions and policy needs. This flexibility allows the government to adjust the tax structure to better support economic stability and growth. Overall, these rate distinctions help balance revenue collection with economic considerations, aligning with the overall goal of creating a fair and efficient tax system. Now, let's take a closer look at the administrative mechanism behind GST. At the core of this system is the GST network, or GSTN. It's a non-government, not-for-profit company that provides the essential IT infrastructure for GST operations. Think of it as the backbone that supports all the digital processes involved, such as registration, filing returns, making payments, and processing refunds. Everything runs smoothly through their portal at www.gst.gov.in. Another crucial aspect of GST is the concept of input tax credit, or ITC. This is one of the key features that makes GST efficient and fair. Essentially, ITC allows businesses to claim credit for the taxes they've already paid on their inputs, like raw materials or services. This means they don't have to pay tax on the tax, avoiding what's called cascading, where tax gets taxed multiple times at different stages of the supply chain. So ITC helps keep the tax system transparent, fair, and prevents unnecessary tax burdens on businesses, aligning perfectly with our overall goal of a streamlined, unified indirect tax system. Let's take a closer look at the features of GST. The motto here is one nation, One Tax, One Market, which really emphasizes how GST aims to unify the country's taxation system. One of the key aspects is that GST is a destination-based tax, meaning it is collected where the goods or services are actually consumed, not just where they are produced. This shift helps ensure that revenue goes to the state where the consumer is located, promoting fairness. Another important feature is the elimination of cascading taxes. This was a major issue earlier, where taxes would pile up at each stage of production, making goods more expensive. GST removes this layered tax structure, leading to a more transparent and efficient system. To manage this complex process smoothly, GST relies on a comprehensive IT system called GSTN. This network facilitates seamless registration, filing, and compliance for businesses across the country, making the entire process much simpler. Finally, GST introduces a uniform tax structure and compliance framework across all states and sectors. This consistency not only reduces confusion, but also encourages ease of doing business, aligning with our goal of creating a more integrated and competitive economy. Overall, these features are designed to promote transparency, fairness, and efficiency, key ingredients for a stronger, unified market. Now, let's look at the benefits of GST, starting with its impact on the economy. One of the key advantages is that it promotes ease of doing business. By simplifying the tax structure and reducing compliance burdens, GST makes it easier for businesses to operate smoothly. It also encourages the formalization of the economy, meaning more businesses are likely to register officially, which helps in creating a more transparent and organized economic environment. Additionally, GST boosts interstate trade and investment by removing the barriers of multiple taxes and complex procedures that used to hinder smooth transactions across state borders. Moving on to the benefits for the government, GST significantly increases tax compliance and transparency. Since the system is designed to be more straightforward and monitored electronically, it becomes easier to track and ensure that taxes are paid properly. This, in turn, helps expand the tax base, meaning more people and businesses are contributing fairly. Moreover, GST helps reduce tax evasion because the digital nature of the system makes it harder to hide transactions. Overall, GST creates a more efficient and fair tax environment that supports the country's economic growth and government revenue stability. Let's take a look at how these reforms benefit consumers directly. First, there's a decrease in the overall tax burden. This means that, overall, consumers will be paying less in taxes, which can leave more money in their pockets. Next, we've introduced simplified billing with a transparent tax breakup. This makes it much clearer for consumers to see exactly how much tax they're paying on each product or service, promoting transparency and trust. Finally, many sectors will see a reduction in prices of goods and services. This is a significant benefit because lower prices mean increased affordability for everyone. Overall, these changes aim to make the economy more consumer-friendly by reducing costs and improving clarity. It's all about creating a better experience for consumers while supporting economic growth. Let's now look at some of the challenges faced during GST implementation. One major issue has been the complexity of filing and compliance, especially for small businesses. Many find the process quite cumbersome, which can be a hurdle for their growth. Additionally, some states, particularly those that are producing states, have experienced revenue loss as a result of the new tax system. This has created a bit of a balancing act between different regions. Another challenge was the dependence on technology. In the early stages, there were glitches in the GSTN platform which caused disruptions and delays. Then there's the frequent change in GST rates, which often led to confusion among taxpayers and businesses trying to stay compliant. Lastly, exporters faced delays in refunds, which impacted their cash flow and operational efficiency. Overall, while GST aimed to unify and streamline the tax system, these challenges remind us that transition periods can be complex and require continuous adjustments. Now, let's look at some important constitutional amendments and schedules that have played a key role in India's federal structure. The Constitution, 101st Amendment, Act of 2016 was a significant change. It introduced new articles, specifically Articles 246A, 269A, and 279A, that created a distinct legal framework for the Goods and Services Tax, or GST. These articles essentially helped streamline the taxation system by establishing a unified indirect tax regime across the country. Additionally, there was an important amendment to the 7th Schedule, which is the list of subjects divided between the Union and the states. This schedule was amended to include Entry 92A, along with modifications to Entries 52 and 54, to better accommodate the GST framework. What this means is that these changes were designed to facilitate the smooth implementation of GST, which is a major reform aimed at creating a single, unified market in India. By modifying these entries, the Constitution allowed the Union and states to collaborate more effectively on tax matters, reflecting the ongoing evolution of our federal structure to meet contemporary economic needs. So, to wrap up, GST truly marks a historic reform in India's taxation and political landscape. It's not just about changing the tax system, it's about transforming how the center and states work together. This concept of cooperative federalism has come to the forefront with GST, ensuring that both levels of government collaborate effectively to create a unified and seamless tax regime. Of course, there are still challenges to overcome, but the impact of GST has been significant. It has simplified India's complex indirect tax system, making it more transparent and easier to administer. This move towards greater fiscal transparency benefits the entire economy, fostering trust and efficiency. Overall, GST is a milestone that aligns with India's broader goal of economic reform and integration, and it's a step forward in building a more unified and transparent fiscal environment. Let's go through the key points of this slide. The introduction of the GST was facilitated by the 101st Constitutional Amendment Act of 2016, which marked a major reform in our tax system. This amendment was implemented on July 1, 2017, bringing about a significant change in how indirect taxes are levied across the country. The legal framework for GST is based on specific articles in the Constitution, namely Articles 246A, 269A, and 279A. These provisions provided the constitutional backing for the introduction and administration of GST. The model adopted is a dual GST system, meaning both the center and the states share the responsibility for its implementation and collection. A key institutional body that oversees GST is the GST Council. Established under Article 279A, this council plays a crucial role in decision-making, setting tax rates, and resolving issues related to GST. There are different types of GST in our system. CGST, which is collected by the central government, SGST, collected by state governments, IGST, which is applicable on interstate supplies, and UTGST, applicable in union territories. This structure ensures that GST functions smoothly across various levels of government. The main benefit of GST is its ability to remove cascading taxes, meaning it prevents tax-on-tax effects, thus simplifying the tax structure and promoting the idea of one nation, one tax. This has the potential to boost economic growth and ease compliance for businesses. However, implementing GST also comes with challenges. These include technical issues, administrative hurdles, and compliance complexities that need continuous attention and improvement. In summary, GST represents a major shift in our tax landscape, aiming to unify and streamline indirect taxation, despite some hurdles along the way. It's a vital step towards creating a more integrated and efficient economy. Thanks for watching. I really appreciate you taking the time to go through this presentation. If you found this valuable, please like and subscribe to our channel at UPS Magazine. Your support helps us bring more insightful content your way. Remember, the main takeaway is that continuous learning and staying connected are key to growth and success. So, don't forget to stay engaged and keep exploring new ideas. Thanks again, and I look forward to seeing you in the next session.